Do you all have mics? Yes, take it away.
Thank you very much. It's our pleasure for being here. Thanks to the Reflect team for organizing such a great festival, such a great event. And thank you all. It's our pleasure to discuss this topic with you because we see like we are currently among people that not only consider themselves as doers, they are doers. And I hope that all of you are here to hear something new and try to discuss with people some few stuff. So what we want to do is actually now, based on our conversation, to trigger some discussions, make you think more outside the box. So without further ado, allow me to quickly introduce you the people that we are going to speak with in this panel discussion. We are really pleased that we have you on board. Thank you very much. So first of all, Alex VAVILOV. Alex is the investment partner of iTech Capital. SAMI MOUGHRABIE is the managing partner, correct me, Sami, if I'm wrong, of ATMOS Ventures, and YORGOS MOUSMOULAS is a partner at Metavallon Venture Capital. Please, you can quickly tell some few words about yourself so that the audience knows more about you.
Yeah, sure. So personally, I had a background in private equity before moving, or more earlier stage, into venture capital. So iTech Capital is a family of different funds, and so we typically invest in Series A to Series B. And we like to have quite a global footprint, so we have a main office in Moscow, in Riga, and also here in Cyprus. And so we look across the whole spectrum at companies that are usually profitable or just break even, and we try to help them grow to a massive scale.
Thank you.
I'm SAMI MOUGHRABIE. I'm the managing partner of ATMOS Ventures. We're a seed Series A fund, sometimes Series B as well. We're a deep tech fund, so we do a lot of commercialization of R&D, and we write checks from about 500,000 all the way up to about 2 to 3 million euros. Yeah, we have offices in Warsaw, Palo Alto, and London.
Thank you so much.
And Metavallon is a seed stage fund in Athens, focusing mostly on Greece and the Greek diaspora for the most part. We typically focus on either deep tech or at least proprietary tech, so defensible tech, and usually, typically B2B, I would say 80–85% at least, perhaps more. That's it.
Great, thank you, George. I would start with a quick story about, as we discussed and that we were sure that we will do a panel discussion, we set up a call when we started discussing all together about what can be interesting for you, not only for us. And we identified pretty quickly that we discussed about VCs based on our backgrounds, and our discussion became more technical, but recently we have seen that for you, it might be interesting more to understand that for the side of an entrepreneur, what makes a success, for the side of the VC, what makes a successful entrepreneur. So understand what it means actually to be an entrepreneur. So based on that, we wanted first to discuss with people that are working more at a later stage, but also at an early stage, about an entrepreneur. Is something that you are born as an entrepreneur, or an entrepreneur can be also made? What do you think, Alex?
So I probably fall very heavily on the side that entrepreneurs are made, in the sense that usually one of the characteristics we find in almost all successful startups is very driven founders who usually, because they're so driven, they develop kind of a long experience, maybe some failures along the way. But this track record allows us to really gauge, their previous performance and their wealth of experience in a certain sector. And it's through this continued effort and trying and failing and trying again that entrepreneurs really develop a talent for it, as opposed to just having a great vision is great. But you really need to have, the ability to execute, and I think that's something that first-time founders don't really consider as strongly. That it's not enough to have a wonderful idea. You also really have to have the ability to bring it to life, and that's usually what we really try to focus on when we're looking at leads.
Sami?
Can we maybe just get a show of hands of how many entrepreneurs are in the crowd? Okay. All right, great. Good to know. Are entrepreneurs made, or are they naturally born? I think it's both. I think you have some entrepreneurs that have this kind of talent for building businesses, or maybe they have this kind of stubbornness. that's inherent in their, in their character that allows them to kind of push forward. But I also agree. I think a lot of entrepreneurs are made. In our case, where there's a lot of commercialization of R&D, you have super smart guys that are coming up with great research proposals and defensible techs, and they're going to have to build companies around that. So a lot of them don't really understand how to build companies from an operational level. So being able to understand operations is something something that can be trained. You need to have the right mentors, the right partners in place. So I think it's a good balance of both, in my opinion.
Thanks, George.
I'll be a bit more simplistic, perhaps, and a bit more harsh. I think that to a certain extent, they are born. So if you are starting, on this basis, it definitely is a very good head start. That said, I've seen examples in our portfolio that have surprised me positively. People who kind of in the first 6 months after we invested were kind of lost. So me and our other co-investors had to sort of go in and spend a couple of days sort of doing, to an extent, in part, mentoring sessions and strategy sessions with them, drilling down, even on really trivial stuff like KPIs to monitor and getting down to the root of the problem. Like, for example, having negative margins or really bad margins or whatever. But I have been positively surprised in at least a couple of cases, but people who I have seen, and I say this to follow-on investors looking at follow-on rounds, that have matured a lot. So I think that's the key word, to be able to learn within the space of months and mature a lot. There are other people who, in contrast to that, they kind of start somewhere in the middle and then they keep going sort of flat. But I think, the really good ones are the ones that go this way.
Yeah, if I can just add a little bit on that, I think culture definitely plays a big role into it. If you look at markets like the US, which are famously entrepreneurial, a lot of it is because there's a lot of focus on sales, right? And when we look at prop tech, deep tech, this type of stuff, usually you have people struggle a little bit more on the sales side. And it is something that you can teach. And especially as a VC, we spend a lot of time with founders, especially on the earlier stage, learning really how to sell themselves and how to sell the product. And you need really the combination of both sides of it, the technical talent, but also the sales acumen.
Yeah, so today also in the morning, Douglas Stark from Voi Scooters, Voi Technologies, one really successful company that is now also close to becoming a unicorn. He said that he had to receive 99 no's in order to receive one yes and started the company that at the end of the day became a unicorn. So what do you think, insisting and focusing on your target, I suppose, is one of the most important characteristics of an entrepreneur, right?
I would say, our job is to say no to those 99 other people, right? And it's not always easy to see who is just stubborn and who is determined. It's like a fine line between the two. And there's been plenty of cases where we've missed, wonderful opportunities because we couldn't necessarily see it. But just like us, there's a statistical component of trying enough times that you get those breakaway successes. I think it's the same from the founder's side, that if they really try many different, VCs, they try different things, eventually they will hit success. And this kind of repetition is definitely important, I think, for most founders.
Sami?
I mean, I love saying no. I always say prove me wrong. Please. I can always be wrong. We always, we make some hits and misses, but I think we're really open-minded, and I would love for an entrepreneur to really prove me wrong. So I think that's a really good exercise.
But Sami, allow me to challenge you a bit.
Challenge.
Tell me one time when you really regretted for saying no to a company.
Airbnb.
Okay.
I mean, you sit there and you think, oh my God, I would never allow anyone to stay in my house, or I would never want to go stay in someone else's house. And that's a great one.
Interesting story, definitely.
It's funny because I actually have a very similar, even perhaps worse story to the 99 no's. We had a company in our portfolio that did something really niche, waste bioconversion into insects for animal food, which is a bit trendy now, but it's still very niche. So they had to knock on, I think, close to 150 doors, more than 100, until they got to the one VC that became the lead investor in the follow-on round. And another one that I'm personally tracking They probably tried between 50 to 100 until they found someone who did not make a a really large ticket, but they brought a few angels around them, so we were able to sort of shape the round in a decent size. So I would say perseverance is definitely very, very important. The other thing is, as I said before, you need to be able to learn over the course of the first couple of years. And then my only other point, perhaps, that pertains mostly to our region is you hear very much from American investors that European founders are very low key and very timid, and and whatever, they don't have enough ambition or whatever. And in fact, this is true to an extent, and it is even more so, I believe, in Eastern Europe, because people are sort of more geeky, I would say, so more of a technical background usually, less of a commercial background, and I do think there is definitely room for improvement there. Whether this can be learned, they can be learned at least for one member of the team, no matter if it's a CEO or the business development guy or whatever, but there has to be someone whose personality allows them to go out and be more aggressive. Because really, sometimes people come in and for a round, they're doing like revenue projections for, I don't know, 3 million 3 years down the line, and you just hit your head against the wall, because that's definitely not ambitious enough, obviously.
Yeah. I would say that especially as you see American VCs coming more and more into Europe and moving their way to the periphery countries, you're going to have even more focus on this kind of cultural mesh, because they're used to hearing, very ambitious, very, egocentric founders, that you'll have even more pressure for local founders to appear this way. And this kind of culture gap might make or break certain startups.
I mean, on that note, it's that sometimes the tech is just so good, but the founders, great technically, but just not a great CEO or a great salesperson. And I've seen a lot of instances where they're like, okay, you know what? Let's switch that to an American CEO, but keep that underlying tech and see where that goes. Yeah. So that's one thing. The CEO of Starbucks got rejected by 300 investors right off the bat. So having this perseverance, and then the 301st invested. So having that type of perseverance really shows, what type of character you have. But you also have to be kind of practical about things, because, people have families, people have children. So it's like, okay, how long can I go, how long can I go in the money-raising situation when I have mouths to feed? So it's, it's hard, because I've seen a lot of companies just kind of fail when they could have probably, if they spent an extra 6 months a year, they probably could have raised money. But people are like, I need a job, so I need to make money. So there's a lot of other things to take into account, other than just kind of like the perseverance and stubbornness of an entrepreneur.
Great. Guys, we are getting a lot of very interesting questions with many likes in the questions, but before starting, I would say we have plenty of entrepreneurs in our audience. I suppose that most of you have ideas that are perhaps like early stage, some of you have ideas that are more mature. For me, before starting with the question, it's important to understand, because we have the chance to have people that focus on early stage and later stages, it's important to understand. Yorgo, a question for you. How do you identify an opportunity at an early stage? Do you have something like a best practice that you use in this case?
I suppose it's much harder at the stage where we're in at the purely seed stage, because most are still pre-revenue, most, not all, but most. So I would say there are only essentially 3 things that you can evaluate, right? First is the product itself and the technology. So I suppose it's important to have at least part of the team that understands the product from a technical point of view. The deeper it is, the more this is essential. The second is, you used to hear, about 100 million, 1 billion market size or whatever as a minimum for an investor to invest. Nowadays, in the past year or so, there's a second thing that's come on top of that, which is, you hear very, very much, is it a 100 million company, right? So it's not just whether it's a huge market, it's whether the startup is going to capture is going to be around the 3-digit or whatever upper 2-digit mark. And obviously the third is the team itself. And in the team, there are You know, again, this is a very soft thing. I suppose over time you manage to sort of come in with some pattern recognition sort of ability, but essentially, the startup and VC world being a very connected market, I suppose, and this is perhaps not very fair sometimes, that people that are sometimes people that have a more sort of flashy background, they may not necessarily be better, but this may help them perhaps for fundraising or whatever, or getting, you know, into the market. So this does help to a certain extent, and a number of investors do look at that. Perhaps they shouldn't, but in practical terms, sometimes it does make a difference, you know, someone's background, to be honest.
Sami, Alex, I think in your case, it's much more important to realize when a company is mature enough in order to invest in, right?
Well, if I just go on to from an early stage seed investment perspective first, if I look at something from the B2B perspective, so I'm just kind of like, okay, you know, what's the real big problem that it's solving? So I mean, we do a lot of kind of reverse engineering of the investment process. So kind of, you know, we feel that there's a real big, massive disconnect between the problems that exist in industry and the tech that's being built to develop that. So what we like to do is we like to kind of go in there and really understand what that problem is. Is it a really large problem that's totally scalable and that needs fixing all across? And then we kind of find those companies that are building those, you know, that are building solutions to those problems, and then kind of do a bunch of POCs and kind of throw money at them and see where it goes. So that's one aspect of the early stage stuff. Now, what were you saying on the later stage?
About if you have a feedback, how you identify that an idea, a company is mature enough for the biggest investment, actually.
I mean, you know, later stage is also very signal-based, in my opinion. You know, if the right players are getting involved, then it's always great to get involved. It's great to get some type of allocation. You know, as an investor at that point, where are you adding value? I mean, are you adding value just with cash? You know, do you have a really good relationship with the founder? Are you on the board? Are you a psychotherapist for the founder, where they really trust you to kind of bring you in? So I think there's kind of a lot of instances there where you can figure that out.
So Alex, it's not only about like numbers and financials, right?
Well, I mean, to a large extent it is, especially the later you go. But this kind of aspect of signals is very important. So we like to particularly lead rounds and be the sole investor, or maybe with one other fund. And for us, it's a lot about timing, right? We want to find these companies that are about to hit profitability or about to make enough money that they get interest from everyone else. And sometimes we wait a little bit too long and they're crowded by interest from everyone else and we decide to step back. Sometimes it's just a bit too early. So there's a big timing component about when you pitch to which funds. And for us, it's really catching that brief moment where we can negotiate good terms and we can make an impact and be really the sole people to drive the company forward, as opposed to, you know, competing with 10 other VCs on terms. And it's kind of difficult to time it properly.
Great. Now I would like to start with the questions of the audience. The first one is like a bit strange. I mean, as moderator, I'm not allowed to say my opinion, but in this case I will do, because I believe like we're in a festival of doers, and if you are a real doer and deeply believe in doing, and you are intrinsically motivated to create something big, you have to believe in inclusiveness, you have to believe in diversity. But still, I would like to make you the first question, and please, I don't want a cliche answer. The question is like, do you evaluate male founders differently to female entrepreneurs?
For us, I don't even look at it or care, because luckily we look at a lot of deals in Eastern Europe, and it may be because of like 100 years of Soviet background, right, where women were doing the same jobs as men. I see as many women founders as men virtually, and in a lot of our careers, you know, we have exceptional CEOs who are women. It doesn't even cross my mind to look at them differently, right? I think it's a big cultural point, right? There's a lot of push for this, but I haven't had to see any kind of need to look for women founders. We have plenty of them that come to our door.
Sami, is it challenging the answer for you? Or?
No. That's it.
No.
No.
The short answer is again no, because obviously the person counts much more than that. However, there are two small caveats to that. One is, for us, we're one of the rare funds that has 2 male and 2 female partners, which is fairly rare. So what I've learned from that is that there are sort of innate kind of differences in the way women and men sometimes handle things. So women are perhaps more flexible in a lot of stuff. You know, I'm an engineer, you know, so one plus one makes 2, right? And so sometimes a woman, it's not necessarily so, but sometimes it's a bit more probable usually that they might be able to look at things a bit more flexibly and add a different perspective. So that's so that applies also to teams at startups. So the teams might be a bit more complementary. They may cover more facets of you know, all the skills, the skill set that the startup may have. That's number one. The second is, of course, you know, everyone is talking about female founders or whatever. So, I mean, let's be realistic. I think that all things being equal, if it's the 2 teams are perfectly equal, I think, you know, having, you know, a more balanced team, perhaps, you know, subconsciously gives a little bit more of an edge, I would say. So I would say it's probably an advantage, if very, very small right now.
Great. I go on with the next question, like, what advice do you have for young entrepreneurs? Alex?
I guess just start as early as possible, right? Like I talked about the idea of failing, and you know, the real founders are the kind of people that, you know, are in high school and middle school, starting their small businesses among their friends, and by the time they, you know, graduate from university, they already have a wealth of experience. So start early, and if you're already older, you know, just try. Give yourself some time and be realistic about your goals and when you'll give up. But just go out there and do it. It's cliche, I'm sorry, we thought we'd ignore this, but I don't know what else to say.
I would say don't get defensive when people give you constructive criticism. I would also say that really, you know, you can be super passionate about your product and it takes over your whole life. But then, you know, it's really hard to see, to have somebody be like, oh, you know what? Someone else has been doing that. And so everything that you've kind of worked hard for the past 3, 4, 5 years, you're just kind of like, ugh, I thought I was unique. So I would just say, just do your research. You know, there are a lot of resources out there. You know, call up VCs, try to speak to whoever, you know, analysts, associates, partners. You're gonna get, people are gonna say no to you a lot. You're gonna have to just continue going and you know, just not give up. And you just have to be really thick-skinned. And I think that's key.
Just to add on what Sami said, I think the important thing is what you touched upon a little bit on the end. So it's important to know your potential investors, because something that would be completely uninteresting to someone might be very, very interesting to someone else because of synergies. There might be a corporate VC or whatever. I mean, I just came across a construction tech VC, a construction tech deal I was looking at like for the past year or so, and I was talking to someone last week, and they said, okay, so they finally did raise their 12 million or whatever. So who did they raise it from? Oh, from a prop tech, construction tech VC, right? And I said, why? I mean, they didn't have any customers. They said, yes, but those guys, they saw something in them, and they know the market inside out. So probably you have to prioritize very well which doors you knock on in terms of potential synergies.
I would also just add one more thing. You know, don't be afraid to pivot. You know, things change very quickly. We saw what happened with COVID. Industries are changing. You know, things are super dynamic. Don't be afraid to pivot, but not just, you know, so drastically, but, you know, in a very calculated way with the right people on board, with, you know, with the right advice. But, you know, don't get too emotionally attached to something because the world changes real quick.
I think touching on both of the topics you mentioned about when to pivot also, right? Speak to your clients, right? As VCs, we want to invest in founders who know their space inside and out and who are bigger experts in it than us. So it makes sense that a construction VC might see something, but as a traditional VC, we might not. And so we want to see that you speak to your clients and you're addressing a real need, and you just don't have this idea that for you sounds perfect, but that people actually want you to come and solve.
So now a more personal question to you. Do you or would you invest in cryptos and DeFi as entrepreneurs?
Speaking of failures, I think we were approached by one pretty successful company now called Celsius, and they were pitching us around like before, you know, they went to the major public, and we turned it down because we didn't have the time to do proper due diligence. We weren't sure about how the business model worked, and now they've already grown in like a year 5-6 times. It's now a multi-billion-dollar business. Personally, like I look at it, we look at the space, but we don't really want to take that kind of risk, right? It's not our expertise. So we look at businesses built around the space and how they can address the needs, you know, like KYC, AML in crypto is a big and up-and-coming trend. But we try not to, you know, speculate. It's just not our area of expertise.
Yeah, I mean, from a cryptocurrency perspective, I wouldn't invest myself, but you know, let's say, you know, I would perhaps allocate capital to, you know, to a fund that has that expertise, that you know, eats, lives, breathes crypto. What I do really like, though, is I really like investing in the picks and shovels of a decentralized ecosystem. I think that's awesome. So, you know, I would love to kind of invest in the foundational aspects of that decentralized system and then kind of, you know, have all the stuff built on top of that. So that's the stuff that I'm interested in.
Fully agree. So also for us, I suppose crypto per se is probably outside our mandate, even formally perhaps, but I'm not sure. Never tested it, but probably not inside our scope, but the enabling platforms for that are. So for instance, we do have one of our latest additions to the portfolio that are actually, they have a sort of asset management trading platform for unlisted assets, and now they're adding one additional feature, which is incorporating DeFi as an input, you know, this extra money, trying to get it invested into all those assets that are out there. Because there's, you know, in the past year or so, there's been an explosion of such money, basically, that is funneling through there.
The next question is very interesting because I think also, especially in Cyprus, we have way too many companies in the service sector, many lawyers, many accountants, many people that do a job that is at the end of the day really person-centric. So the question is like, what is the key to scaling when the service is by default very personal, very person-centric? How could you ever, for example, scale a psychology session instance?
I mean, you can't. That's why I typically look a lot at tech-driven businesses, right? And I think that's why all these VCs go into SaaS business models and all this type of stuff, because it's easy to scale. You have like very limited fixed costs, and at the end of the day, you can grow massively in just a few short years. More traditional businesses always have issue scaling, and it always requires hiring more people, and your margins will always be higher. So personally, it's something that we try to avoid even. Which is unfortunate. There's a lot of great ideas out there, but we're just not the right fund for it.
I'm not the right fund for it, but I just, you know, marketing budget. At the end of the day, like, you know, first of all, if you're at the beginning, you know, just find like 200 people and just, you know, go to each one and see if they're going to use the product, and then just, you know, find marketing budget. You need to be, I mean, on the services side, it's like, you know, it has to be somewhat defensible or somewhat unique. You know, you can't just go into like a, you know, just a big universe sector and just kind of be a smaller player and go there. I don't know. There needs to be some sort of specific value add, but, you know, marketing.
I think an interesting, about marketing budget, right? One of the problems a lot of companies I've seen trying to solve is this influencer marketing. And it requires a ton of manpower because you need one person managing every relationship. And I saw a clever solution from one business, which was essentially a kind of pyramid scheme, right? Where scouts would recruit people and also manage them. You do face problems in terms of quality assurance and, you know, whether it'll be actually they doing the right things. But doing this kind of referral schemes, things that are a little bit more hands-off, allows you to scale this type of businesses potentially. So like franchises, right? McDonald's. How can you have, you know, thousands of branches everywhere? It's because it's a referral scheme.
Let me go on with the next question because it gets so many likes and it seems that you really want to hear the opinion of our panelists. What is your opinion on college university degrees versus self-taught entrepreneurs? Are degrees needed? Everything is online to learn. So I think this is like a mindset thing. What do you think? George?
I suppose it comes back a little bit to what I was saying before. It's kind of a networking thing. So I suppose if you go to a really expensive university, the value is in the networking and the relationships. It's not really in the learning. Yeah, it is still a little bit, but it is true that you can learn. If you are disciplined enough, you can learn everything online. The thing is that I would say the majority of people are not disciplined enough to go and sit down and spend like hours and hours and days and years in learning on their own. So it does help to be in a live environment. It has been tested, obviously, in the last couple of years, but I still do think it's easier to learn in a live environment. But again, the relationships with you forge are also quite invaluable.
Yeah, nothing to add here. For me, no, it doesn't matter, but it's, the networks you get from going to a U of C or Harvard or Yale, or if you get your MBA in one of those top institutions and have to spend, 100, 150 grand, most of those people are going to end up having money in the future. So they're a great resource to fundraise. And then, everyone's kind of going to go and doing their own thing. So just tapping into that network is key. That makes it easier, but, I would say that's just kind of the top 5%. But generally, no. I just think you just have to, in the startup phase, you just have to be a hustler. And actually, sometimes going to those institutions just, makes you less so. So I don't know. It depends.
You go into consulting typically after those places.
So in consulting, or if you want to go in the VC, you kind of start in the VC space, fine. But as a founder, no, you need to be a hustler. You have to know how to deal with, low budgets and not eating for a while and sleeping on couches and maybe having, fights with your girlfriend or wife or losing relationships. I mean, this is all kind of crazy stuff, right? So college degree has nothing to do with that.
Yeah, I mean, especially the moment you have any decent experience, the degree doesn't matter. It's really about what you can achieve and, how you can hustle and how you can, grow what you need.
I want to make you one more question because I hope and think that your advice might really help Navid in this case. So he writes believing in the success of my projects, this stops me actually from having a founder. Why I need a founder if I believe in the success of my project? What would you advise him?
Funding, right?
Yeah.
I mean, funding just...
Founder.
Sorry?
From having a founder,
co-founder,
I suppose.
right?
Yeah.
I mean, like I said, it's a crazy period. It's a lot of work. A co-founder just helps you divide it, and you might be complementary in terms of skills. Like you can have a more technical founder, a more sales-driven founder. So I mean, it's really about how much you want to share your dream, how much you agree on vision. And if you don't find somebody who you can work with for the next 10, 15 years, every day, day in, day out, then do it on your own, right? It'll just be twice as much work, but you can do it.
Sami?
I would just say that one hand cannot clap alone. So, sometimes, that
takes two to tango.
Takes two to tango. I mean, like you said, the complementary aspect and, can't do it alone.
I would simply say that a very critical quality of a founder or co-founder is to be able to hire people that are smarter than themselves. You hear that a lot, and it's actually quite true. And that actually expands to their co-founders. So be able to team up with people that are much better themselves in other areas. And we've had tons of this in the portfolio. I've had usually, tech people that can't really sell or have a hard time talking to either customers or investors. But I've also had a couple of cases where someone is a great salesperson, but they need, some strengthening in some other area.
So I would just say, Navid, if you're a salesperson, find an operator. If you're an operator, find a salesperson.
Great. Thank you, guys. Yorgos, Sami, Alex, thank you very much. Thank you for being with us.